Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, October 7th, and 10-year bonds today did get above 4% for the first time in 2 months, and oil prices continue to rise today, which did give us an overall cautious to slightly bearish sentiment in the market. And SPY did open today to start the week with a gap down. And we gapped down and we tried to hold this level for the first half of the day, at least until lunchtime, and then we dropped. We took it underneath the 35 EMA, underneath the 30-minute 200 moving average, all the way to the bottom of the implied move, and then we filled this gap from last Friday. We even dropped underneath Tuesday's implied move before we swung back up to close just underneath the bottom of the implied move. So the bottom of the implied move was 568, and we closed 20 cents underneath that, 567.80. So even if you did sell 568, 567 bull put spreads when we did drop, those would have paid about 50% at expiration. And then taking a look at SPX, we also opened here today to start the week with a gap down, and we tried to hold that level. We even tried to hold the 35 EMA, but we did end up losing all of those levels. We dropped underneath the 35 EMA, underneath the 30-minute 200 moving average. We dropped underneath the bottom of the implied move, and we did close almost aligned with Tuesday's implied move. And if we zoom out just a little bit here, you could see that after that big rally, after FOMC, we have been consolidating back to the 30-minute 200 moving average. And if we remove price here, you could see that we bounced when we brought that 35 EMA back down to the 30-minute 200 moving average. And then this looks like maybe it was a dead cat bounce right here. We still closed bullish because this 35 EMA is still above the 30-minute 200 moving average, but it does look like it may want to cross under. And if we do cross under, that would make us bearish in SPX, and then this 30-minute 200 moving average would act as a resistance. So SPY did close down 0.90%, SPX closed down 0.96%, VIX popped 17.97%. That is definitely going to give us an interesting trading range for tomorrow, and we did not close within the implied move in either SPY or SPX. Now in SPX, we closed near the next day's implied move, and we were actually pretty far outside of the implied move on the day, but SPY, we closed just a very tiny bit underneath the implied move, just 20 cents underneath. And then taking a look at QQQ, we did also open the week here with a gap down, and we did come back into that gap a little bit. We closed it about halfway before we dropped down. We got underneath the 35 EMA, we got underneath the 30-minute 200 moving average. We took it all the way to the bottom of the implied move, and there's a little bit of a wick right here that did go outside of the implied move, but we actually did close within the implied move by 10 cents. 482 was the bottom of the implied move, and we closed at 482.10. So if you did sell 482, 481 bull put spreads on the drop, those would have closed up 100% for you at expiration. So QQQ did close down 1.07%, VXN closed up 12.48%, and we did close within the implied move today. So options did call 482 almost perfectly. And we do see the same thing over here, 35 EMA, we consolidated back to it, and then we saw that one day where we gapped up, but that 35 EMA is pointing to this as a possible bull trap. So keep an eye on this 35 EMA. If it does cross underneath the 30-minute 200 moving average, we will have officially gone bearish here. And then this kind of sad sideways 1 hour 200 moving average within this gap would likely be the next target. But that's moving a little bit too far ahead. Let's take it over to IWM. IWM did open with a gap down here as well, and we dropped underneath the 35 EMA, and we tried to hold the 1 hour 200 moving average. This was a support last week, except we did drop underneath it here on Thursday before gapping back up. So that 1 hour 200 moving average was support for most of the day. We did lose it. We took it down to the bottom of the implied move and just a little bit outside of that, but we did swing back up and we did get back above that 1 hour 200 moving average. So it did hold today, even though we did break underneath it, and we did close underneath the 35 EMA right here. And something I just wanted to point out, because I do mention this often, that once we make that cross down, that this 30-minute 200 moving average is a resistance. And I just want to point out how clearly that played out. Even though we had a big up day after making that cross down, we saw resistance here and then a gap down. So always look to that 30-minute 200 moving average as a resistance level if the 35 EMA is underneath it, even when we have a big up day, because that resistance right here played out with a down day that followed. IWM did close down 0.78%. RVX closed up 12.16%, and we did close within the implied move. 216 was the bottom of the implied move, and we closed $1.50 higher at 217.43. And DIA only has weekly options, so we do have a wide looking trading range. It goes from Monday to Friday. This is Friday's contract, and we did open today with a gap down, and we actually gapped down to right here, came back up and filled about halfway of that gap, and we got pushed back down. And just like everything else, we fell underneath the 35 EMA, underneath the 30-minute 200 moving average, and then right here at the gap is where we bounced up a little bit. Now right here looks like we could see a possible bear cross right here. If this 35 EMA crosses underneath the 30-minute 200 moving average, then this 30-minute 200 moving average should absolutely be treated as a resistance right here, but only if this 35 EMA crosses down. So where we bounced right here on this gap, that is the gap from FOMC where we got the rate cut. So we gapped up, and then you could see when we dropped into this gap a little bit the following day, we saw support right there, and then we came back down, saw support. We saw support there last week, and that is where we bounced today. So 418.50 is a very clear support in DIA. We also have that 1 hour 200 moving average coming in. That could add some additional support if we do drop. And DIA did close down today 0.9%, and we did close within the implied move today. All right, that is how we started the week. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions or you just want to say hi, leave me a comment. And if you want to help support my channel and you just took a trade that was really profitable and it was because of something you learned here, then don't forget about that thank you button. You can buy me a coffee or dinner, and it really helps out, and it helps me to bring you more awesome content, even in a raging hurricane. Alright, so starting in SPY, tomorrow's implied move is between 563 and 572, and that is from options. The 30-day average volatility is $3 wider in each direction, 560 to 575. And on Wednesday's contract, the implied move is 561 to 574. And to the upside, the very first level to look for is going to be the 30-minute 200-moving average. And really, we could pair that with the 35 EMA because they do act together. And if this 35 EMA comes down, and if it bounces, then the next level to look for is going to be 572. Above that, we do have the down gap from today. So that bear gap, the top of that gap is 573. It's 572.80, but I'm going to round it to 573. And when we fill a bear gap, that often becomes a resistance level. So that's just outside of the implied move. And then we also have the down gap that we made just underneath all-time highs after Jerome Powell spoke last Monday. So last Monday he spoke, we got a big spike in the market. The next day we gapped down. So that was last Monday. And this gap down here was this Monday. So those are both at the top of the trading range. And then I have 575 as the top of the trading range. That lines right up with where we have all-time highs at 574.71. So we have all-time highs and then two bear gaps protecting it to the upside. And then looking back at this level, the 30-minute 200-moving average and the 35 EMA, if that 35 EMA does break underneath, then the next level to look for is going to be the top of this bull gap. This is from FOMC when we had the rate cut, then we gapped up. And then when we came back down into that gap, we filled it a little less than halfway, and that has been our support every time we came up to it. So right there, that's 565. 563 is the bottom of the implied move for tomorrow right here. Just underneath that, the 1 hour 200 moving average. And within the bull gap, that could give us some support for tomorrow if we do find ourselves in that gap. And then 561 on Wednesday's contract. And then just underneath that, we have one more gap. That gap was made just after CPI and PPI last month. So we gapped up and then we rallied on the way to FOMC and then we gapped up. So those two gaps are underneath us tomorrow. So we have two down gaps and two up gaps. And this 35 EMA does look like it wants to cross down. That is just my opinion, but I do think we do see lower. And these are some really good levels to know heading into the next 2 days of trading. And then SPX, the implied move over here for tomorrow is between 56.50 and 57.40, and that is from options. 30-day average volatility is a little bit wider, 56.25 to, I didn't fill this out, it's all-time highs, 57.67. 37 is pretty much where we have the top of the trading range. And then on Wednesday's contract, 56.30 to 57.60. To the upside, we do have that 30-minute 200 moving average and also the 35 EMA. And that does look like we may see that cross down. It did see a bounce last week on Friday, but it's curling back down and it looks like it does want to go under. But if it does bounce here and we find support, next level to look for, top of the implied move, 57.40, then we have this down gap that we made today. Top of that down gap is 57.50. Next gap above that is where Jerome Powell spoke last week. We closed up and then the next day we gapped down and dropped. So the top of that gap is 57.62, and then above that we have all-time highs. So we do have two down gaps protecting all-time highs. And then if this 35 EMA does cross underneath, then the next level to look for is going to be the top of this gap. That is the FOMC rate cut gap. We got rate cuts, then gapped up, and then when we came back in, we've seen that level as support 3 times now. So it is a support level that has been tested, and that is 56.75. Underneath that, 56.50 is the bottom of the implied move with the 1 hour 200 moving average just underneath it. So if you're looking for support levels, looking for targets to take profit, if you're short, 1 hour 200 moving average is looking awesome. Underneath that, 56.30 is the bottom of the implied move on Wednesday's contract. And then the bottom of this gap, remember when bull gaps fill, the bottom of the gap is a support level. That is 56.15. And then just a little bit further out, we have this gap right here. That is the CPI PPI gap, and then the 50-day moving average if you're looking out a little bit further than the next 2 days. And then QQQ, the implied move over here is between 477 and 487. Let me get a little closer in here. So 477 to 487, and that is from options. The 30-day average volatility, 473 to 491, and on Wednesday's contract, 475 to 489. To the upside, I'm pretty sure across the board we're looking for the 30-minute 200 moving average and the 35 EMA. So far, it's still closing bullish, but we did see a bounce here and it did curl back down. So it looks like we may see a drop underneath the 30-minute 200 moving average, but that's not what has to happen. We can see support here. And then if that's the case, the next level to look for is 485. And 485 has a little bit of history as being a resistance. And let's zoom out a little further. So 485 right here, 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 and then here we're having a little bit of trouble again. So 485, about 3/4 of the way up the implied move is the first level of resistance. Then 487 is the top of the implied move. And then we have the bear gap that we made today. Top of that gap is 488. And then 489 is the top of the implied move on Wednesday's contract. And this bear gap right here, it's a resistance level, but also it's a resistance level that has held up back here. So you could see resistance, 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 resistance. So keep that in mind. And then if this 35 EMA does break underneath, the next level to look for is going to be 477. That is also the top of the bull gap. So 477 is the bottom of the implied move. It's also where we have the top of the bull gap, and that is the bull gap from FOMC when we saw the rate cut gap. Within that gap, we have the 1 hour 200 moving average, which is completely flat. And because it's so flat, it does have a high probability of pulling us in, and from there we need to turn it up if we're going to use it as support. We have the 50-day moving average, which still has some decent momentum just underneath it. So if the 1 hour doesn't hold, 50-day moving average is right there and it will catch. And then I think I forgot to mention that 475 is the top of the implied move on Wednesday's contract. So definitely a fun looking trading range over here. And then IWM. IWM, the implied move is 215 to 220, and that is from options. The 30-day average volatility is 213 to 222, and then Wednesday's contract 214 to 221. To the upside, we do have the 35 EMA. We did close underneath it today. So that is resistance 1. If we do get above that, we do have this down gap from today. Top of that gap is 219. Then we have the 30-minute 200 moving average right here. And ever since we saw that bearish cross down right here, we have seen that 30-minute 200 moving average as resistance. So as long as this 35 EMA is underneath the 30-minute 200 moving average, this should hold as a resistance level. Above that, the top of the implied move is 220. Then we have the bear gap from right after Jerome Powell spoke last week. And then the top of the implied move on Wednesday's contract is 221. And then underneath us, especially if this 35 EMA holds as resistance, we do have the 1 hour 200 moving average. We have seen that as a support. This is last week. And then we dropped that Thursday caught support on this downward facing 50-day moving average, and then we got back above the 1 hour 200 moving average, and now we have seen that as support. Even though we did break underneath today, we still closed above it, and it's definitely still a level to know and look for. If this 35 EMA breaks underneath that 1 hour 200 moving average, that is double bearish. Cross down here, cross down here. This hasn't happened yet, but if it does, then look down to the 50-day moving average. The momentum there is down, so naturally it's going to pull us lower. 215 is the bottom of the implied move, and 214 is the bottom of the implied move on Wednesday's contract. So really, really cool and super beautiful trading range in IWM. And just within the implied move tomorrow, we have 3 moving averages. Okay, the 50-day moving average is a little bit outside of it, but it's interesting to see that we have the 1 hour 200 moving average right in the middle, the 50-day moving average at the bottom, and the 30 at the top. So should be a lot of fun here. And then DIA. So the implied move for tomorrow is between 413 and 427. The implied move on the week is 416 to 430. We do have a tendency to gravitate towards closing within the implied move for the week. So even though we do drop out tomorrow, if we do find ourselves down here, that would be a screaming buy for a bounce back in the rest of the week. But to the upside, we have the 30-minute 200 moving average and the 35 EMA. Just like in all the others, we're watching to see if this 35 EMA bounces here or if it crosses underneath. And if it crosses underneath, it's bearish. And if it bounces, we're bullish. And if we do see a bounce, then the next level to look for is this down gap from today. If we do fill that, the top of that gap, 423.35, so round that however you need to, but the top of the gap should act as a resistance level, especially since we have a solid amount of resistance at that level right here. We've seen that for the past 2 weeks as a resistance. So 424 is resistance, and then the top of the implied move and all-time highs, 426. I actually have it at 427. 426.20 is where we have all-time highs. And then of course top of the implied move for the week is 430. Doesn't seem like we're heading in that direction, but that's still what it is. And then to the downside, we have the top of this FOMC rate cut gap. We have seen that as support since FOMC. So FOMC was right here, and we bounced here today. So that was 18 days of this level as support. So 418 is where we have current support. If we do drop into that, then the next level within that is going to be the bottom of the implied move, 416. And then we have the 1 hour 200 moving average. And then the bottom of the gap lines up with where we did see support right before FOMC. And then we do have one other gap within the implied move for tomorrow, and that happened a few days before FOMC, and then that's where we saw that support happen right there. So a lot to look for. Underneath that, we have the 50-day moving average too, and one more up gap, so a ton of support underneath us. And that is everything I see. Have fun tomorrow, guys. Trade safe. Make sure you take profits when you're up, and I will see you